Hey everybody, Jonathan Broadbent here, your host of UnWoke.Academy. We've had to restart this live stream. I'm not exactly sure why. Later I'll look into the technology. It was some sort of glitch on the software that I use, so I'm somewhat starting over again. I'd actually gotten a few minutes into the discussion before I realized the little note in the corner of the screen that let me know that the broadcast had ended. I have no idea why. Anyway, restarting the conversation. I'm Jonathan Broadbent from UnWoke.Academy and the Financial PMA, and I want to kick off today's conversation by referencing a post that was made on Facebook by Florida Governor Ron DeSantis. Of all people, we're going to start there. Ron DeSantis made a post, I think it was yesterday, September 2nd, that has received a lot of response. So, as usual, I'm particularly drawn to the comments that are posted after the post, and they're really telling. They're very interesting. Ron DeSantis posted another screed about how COVID protocols were handled during the COVID debacle. And yes, just humor me for a minute. I know nobody wants to talk about COVID, and that's not actually the topic of today's podcast, but it's a starting point because Ron DeSantis posted that the whole thing was ludicrous and ridiculous. And the whole notion of closing businesses and not allowing medical professionals, doctors, nurses, clinicians, etc., to talk about what was in those jabs was ridiculous. During COVID, and still to this day, I applaud Florida Governor Ron DeSantis for his approach to it. And I think more people, I firmly believe a lot more people should have put their foot down during the whole COVID debacle. Most didn't, unfortunately, but some did. And during COVID, there are some doctors, and specifically, I look not as like a colleague or peer, but as a kind of a hero of mine. I look to Dr. Simone Gold. I really appreciate the voice of Del Bigtree, Dr. Robert Malone, Dr. Sherry Tenpenny. I actually have a nice picture somewhere with Dr. Sherry Tenpenny. She gave a speech somewhere. I went to go and listen. All of them got berated and attacked by social media, but they were the type of courageous individual who pushed forward and asked questions anyway. And there should have been that environment, especially when it comes to injecting something into your body, where there should be the breathing room to have an open dialogue about what's in it. And thus the whole notion of, shut up, roll up your sleeve, don't ask questions was preposterous. Well, for me, as I said, the comments were really intriguing to me. There were a lot of people that wrote in who have worked in the medical profession, and they wrote about their experiences during COVID, the feeling of being on the verge of being canceled or threatened effectively with loss of income if they asked any questions or challenged anything. Well, flash forward now, and I don't know about you, but I'm following the things that are coming out of RFK Jr.'s comments and the newly revived CDC and federal health agencies. This stuff we're learning about the mercury that is allegedly included in a lot of these shots and everything. I pay close attention to that because, like most people, like pretty much everybody, I want to be as healthy as possible. So that's great information, and it's excellent news that's coming out. And I think more and more people are learning and gravitating toward understanding what goes into those shots. So I have great news to share with you, and that is researching finance is actually far easier than researching medicine. Yes, I know that if you receive one of those 401k enrollment booklets or your IRA person is gives you that sheet, it's I swear it's designed to look way more complicated than it truly is. And I think in large part, I don't mean to disparage an entire a lot of people, but I sort of will anyway. I think we've entered a time when very few financial advisors, financial planners, whatever you want to call them, actually know about what's truly happening in the investments. There is this environment where there are kind of protocols, or actually in some environments it's way more than a protocol. They're actual mandates, and I'm aware of some. For financial professionals to inject, sorry for the crossover terminology, but to inject as much stuff into their clients' portfolios as possible. It's high profit stuff. And many financial advisors have no idea what the actual mutual fund or whatever the investment vehicle is does, or how it's invested. So, yes, there is a very large part of me that believes that people like me challenging the narrative in finance, I'm going through, and I believe that I'm virtually identical in a different arena to all those people that I think are champions, that are leaders and they had the audacity to ask questions, like Peter McCullough and Dr. Simone Gold and others. So, as I said, in the world of finance, looking into things is actually super, super easy, and it's free. I have, as a financial professional, I own a company that works in finance. It's been just clobbered by weaponized regulators for 5 years now, but it still does exist. It's a skeleton of its former self. If that doesn't make sense to you, or you want to know more about that, I actually did a post a few days ago. It's a long form post on Substack. It's basically something like weaponized regulators crushed me. So what do I do next, or something? Um, but that explains the whole weaponized regulators thing. But sorry, a message popped up. I keep putting Substack on Do Not Disturb, and it doesn't seem to work. So anyway, getting my thoughts back in order. The ability to research what's in your investment portfolio is actually far, far easier than you might think. I'm going to do something a little bit unusual today I don't typically do, and that's share a screen. I've got it all set up here. If you're on the Substack, you are on a different camera and microphone. I do encourage you to hop over at whenever convenient onto your favorite platform, whichever you prefer. Facebook, YouTube, X, or Rumble will all be able to see the screen that I'm about to share. And by the way, if you're on any of those platforms, please do ask questions if any part of this is unclear, or you want to add some mutual fund name that you're familiar with or you've been exposed to. Ask me. I'd be happy to go through this same exercise with any mutual fund and any investment vehicle. But what I've got today is a screen share. So I'm going to open up Brave here. You can see Brave. You should be able to see that now. Facebook, YouTube, X, and Rumble. I prefer Brave, but this works in any browser, any search engine. It doesn't matter. Google Chrome or Microsoft Edge or whatever you may use, you can do the same thing. I just prefer Brave. It seems more, it's less creepy and more streamlined, and I don't know, I like it. But what we've found, an alert follower has referenced a mutual fund that is called the JP Morgan US Equity Fund. That's not an investment recommendation. This is just simply one that we're using as today's representative example. So anytime you come across a mutual fund, I've mentioned this before, you may see some letters after it. Mutual funds are always 5 letters ending with the letter X. You don't need to remember that, but if you see it after the mutual fund name, and it'll be like the whatever, the Vanguard something, or the BlackRock something, or the JP Morgan Chase something, there are somewhere around 17 or 18,000 mutual funds out there. Whatever the name is, by the way, I mentioned some that you should be avoiding. If you've been watching by now, you know the reason to avoid those companies, but whatever it is, and if it's on some sheet that's given to you, somebody's recommending that you invest a certain way, or you get one of those 401k enrollment booklets and it's got some options on there, by all means, do what I'm about to do now. Open up your search engine And you can start typing in, I'm going to click in here, JP Morgan Chase US Equity Fund. Search. We're going to find all sorts of stuff. And one important facet of our conversation today has to do with the different ways that any mutual fund, virtually all of them, are sold. They may have different, what are called share classes. You don't need to remember this. It's not important for today's conversation. It is important to know about. And in a separate conversation, I'll talk about trying to get the least expensive version, if you are buying a mutual fund, possible. Their incentive, the motivation, is to sell you the most expensive version of the thing. But ultimately, what we're after is what it's investing in, and that won't change based on the share class. So the person who has communicated to us this JP Morgan US Equity Fund is in the ticker symbol JUESX. So super easy. When you have those 5 letters, and again, this is just mutual funds that work that way, 5 letters ending in the letter X, instead of having to type in JP Morgan Chase US Equity Fund in any browser, this is a great trick to know. Just type in those letters, JUESX. Boom. There's information pops up from all kinds of different sources. You can pick your favorite. If you like Yahoo Finance or Bloomberg or Morningstar, US Equity News, Dividend.com, I'm not familiar with that one, Stock Analysis, a treasure trove of information. But it actually gets much easier. If you don't have a favorite or don't like any particular news source, just follow me. I have another screen tab opened up here that is Morningstar.com. If you have a pen handy or a phone, text yourself that name. JP, saying the name of the fund again, Morningstar.com. Text yourself or write down Morningstar.com. I like it. It's one of several that serve a very similar purpose, but it's free, it's open to the public, and anybody can do this. So let's say that you start off here. If you're starting with Morningstar.com and you've got that enrollment booklet from your 401k human resources department, and you see like 15 different funds there, of course it's going to have the ticker symbol. You are now, if you've opened up a browser and typed in Morningstar.com, you're about 15 seconds into research. Type in JUESX. It opens up all kinds of information about this JP Morgan US equity. Again, this is free. This doesn't cost you anything. You see this thing in the corner, you can get a 7-day free trial of some other thing, and you can upgrade and get whatever, more stuff. You don't need it. Don't do that. I'm not suggesting that anybody upgrade. If you want to, if you get really into it and get all excited about your own research, great. But for the other 99.999% of society, don't pay. It's free. So when you open this up, I want to just pause right here and bring your attention to this expense ratio. That's your cost. That is an ongoing cost. So when you hear me talk about the financial PMA and how we eliminate the management fee, that's your management fee. This one happens to be 0.690%. So it's a little less than 3/4 of 1% every year gets sort of siphoned off of the growth. But whatever it's invested in and however the return, some of that money goes to pay the staff and the research group and their marketing and their advertising and their compliance and listing and all of that stuff. So just know most of these large institutional investment managers, they make big money. They make a lot of money. And that this is where it comes from. This is why they make lots and lots of money. If you feel that it's worth it, then great. But let's do a little experiment here. When I looked up, just looking for JP Morgan US Equity Fund, I'm just going to go back to a browser and show you something. I want to show you a little difference here. JUEAX. Okay, JUE. So JUESX is one share class. That's one way of buying that exact same mutual fund. When we go to Morningstar, look at this expense ratio. I said it's 0.69%. That's the fee. That's your charge for buying that. That's what they make. Now let's type in JUEAX. This is a little bit of a tangent, but it's way worth it. 94, 0.94%. There's your price difference. So let's say that you and your next door neighbor both decide on some day to go out and spend $10,000. You're going to make a $10,000 investment into the JP Morgan US Equity Fund. Again, that's not a recommendation. I'm using this as an example. Your neighbor buys one at what we call 94 basis points, a little less than 1%. And you're fortunate enough to buy the institutional share class, the less expensive way of buying it, and you end up paying less than 3/4. It's still a fee and you're still paying for it. What you'll find over about 30 years of investing is you will have significantly more money than them, or reverse that. You end up with a worse, more expensive share class. That's why share class matters. Anyway, that was a little tangent. That's not actually where I was headed with this. But what I want to do is notice these tabs here. You've got a whole bunch of info. Again, for those watching on Substack, what I'm describing here is all free. It's all free, publicly available. And this Morningstar is just one of many different sources you can go to. The 1, 2, 3, 4, 5, 6, 7, 8th tab over. Click on portfolio. If you're somewhere where you've got a web browser, you can follow along with me. Type in this one or some other mutual fund. You can search in Morningstar using the name or the ticker symbol. It doesn't matter which ticker symbol you use. It's going to bring up information on the fund. Let's click on portfolio. And here, we're going to find a whole bunch of the usual suspects. So if you're putting $10,000 into that fund, what are you getting? You're getting Microsoft, NVIDIA, Apple, Amazon, Meta, Alphabet, Wells Fargo, Broadcom, MasterCard, Baker Hughes Company, and many others. Woke stuff. It's woke stuff. You got a whole bunch of woke stuff. You're funding the woke. And a lot of your money is invested in what I'm calling the globalist bubble. Why do that? Why pay, in this case, it's JP Morgan Chase, to do the same things with your money, with your investment dollars in your 401k or IRA or whatever it is, that virtually all the other mutual funds are doing at the same time? It's funneling it into the same small little group of overcapitalized, overfunded companies. Why would you do that to yourself? Why would you want that? So there are a couple of pages here we can scroll through. Page 2, we've got American Express, Walmart, McDonald's, NXP, Lowe's, Oracle, Vulcan Materials, Northrop, Exxon, and Walt Disney Company. Oh, goody. If you buy this, you're funding Walt Disney Company. Why do that? If you're one of the people I expect you probably are, you're probably not the type to want to fund Walt Disney, Bud Light, which is Anheuser-Busch, or whatever. Any of those companies that you are not liking right now and want to maybe not put your money toward and not fund. This is a free, what did it take me? 1 minute. 1 minute. Let me do it again. All right. So I know for people who are not thrilled by this sort of thing, I'm kind of a in the weeds sort of person. That's how my brain operates. But just imagine we're starting the conversation all over again, and I'm opening up Morningstar and I'm saying, hey, friend, if you get some investment recommendation and somebody tells you that you should invest in JUESX, go to Morningstar, JUESX. It opens up. I can click on portfolio. I can scroll down and see what it's invested in. That's under a minute. That's under 1 minute, free. It costs me absolutely nothing. You can do it on your phone too. More people should take the 1 to 2 minutes to know how this stuff works. This is the equivalent of what's in the jab. This is the financial equivalent of what's in the jab. What are you investing in? Because remember, whatever you get invested in, that becomes our future. So if you are interested in regrowing America's middle class and trying to bring back a vibrant economy to America, which a lot of people refer to as America First or Make America Great Again. If you were somebody who's even mildly curious about what that might mean, or maybe you hate that term, but think that we should be investing in companies that fit your value system better, and or maybe you don't think any of that and you don't care. Why invest in the things that are, I can make the argument, and I do, are preposterously overfunded? So um, we've got a portfolio that's based off, and I keep mentioning this, a portfolio that's based off of the research and due diligence that we do. That's the opposite of this. The first thing to know for anybody that's new, and welcome. It looks like we've had some new people join us on a few of the platforms. Hopefully you find parts of this information and this podcast intriguing. Go back and watch from the beginning. I'll walk you through, I give you the websites that I'm using. But knowing this and knowing that if you're this person, you're spending, let me go back to the main page on this. What was it? 69 basis points. You're spending about just under 0.75%. You're losing every year to go and pay this company to do this work for you. And I apologize. Something apparently is very exciting for the dogs in the background. Humor me on this. So why pay for somebody to put you into this stuff if you can go all on your own and buy these sorts of things? If you, let's say you wanted these, if you want Microsoft and NVIDIA and Apple and everything, it was the case back in the 80s and 90s that I'm hoping somebody is paying attention and quiets the barking dogs. That's sorry about that. But you could go back in the 80s and 90s. There was this whole sort of shtick that mutual fund companies had, saying that the stock trading costs were huge and some brokers out there were making a fortune off of the stock brokerage, whatever. Look at your phone now. Look at your smartphone. Discount stock trading is so inexpensive. It's practically free in the scheme of things. So there's an easy back of the napkin test to do. I would look at the portfolio cost, however much money you have in here. Let's just say discount brokerage trading costs are like $5 or something. That is really frustrating. And of course, the dogs have terrible timing. But let's say it's $5 per trade. How many trades would you have to do to equal the 69 basis points, the 0.75%? Let's say that you figure out that you're paying this company $7,000 a year in management fees. That's not unreasonable. I see it all the time. Or even 1,000 or 500. How many trades is that? So if you're building a portfolio, and again, I'm going to continue to reference, and each time I say this, I am not an advocate of day trading. The people who want to trade in and out and guess the markets and try and predict timing, I'm not your guy. This is not the podcast or discussion for you. I suggest looking elsewhere. Everything we do and talk about and advocate for, and the whole strategy behind the financial PMA, is a long-term buy and hold strategy where we know what we own. There are no management fees, and a lot of the woke stuff, or all of it, is stripped out of your portfolio. So you're not funding a detrimental, harmful future for the next generation. Last piece here is another tab. I've got a third tab open here. Let's say and just grab any of these. And I suggest doing the same thing I've done here. Open up a few different tabs. I like what Inspire Insight has done. Now, if you've watched those episodes where I interviewed Matt and Drew from Inspire Advisors, this is a component of the company they work with. So if you go here to Inspire Insight, you can type in the name of any of those companies to find out a little bit about how Inspire feels about that company. Microsoft Corporation, negative 100. Not surprised by that at all. So super woke, ultimate far left, worst you can get. You're funding that if you're putting your money in that mutual fund. And um, let's look at another one. Let's say there's one in here that you're not familiar with. Let's say that not many people are familiar with Baker Hughes. Let's go back over to Inspire Insight and see if they are following Baker Hughes. It would help if I spell it correctly. So Baker Hughes isn't bad. That's a positive 60. Seems like that's an okay sort of company. Mixed in with all these super woke far left bad things, many of which I argue are already preposterously overfunded. This is what your money is going into. So again, using that analogy and reference, think of this like knowing what's in the shot. What goes into the vial before it's injected into your arm in the medical world or injected into your portfolio in the financial world. That's what this stuff is. This is what it does. This is the potential harm to your future. As I said, I am happy to go through these or similar sorts of analysis for anything you want to throw our way. This is a great opportunity to reference Matt and Drew's very generous offer to do an impact report for you. No strings attached, no cost. They're just looking for an opportunity to meet more of our followers at UnWoke.Academy. Get a hold of Matt and Drew. I will actually just toggle back over and you'll find several of the episodes where I've interviewed them. There are even there's a commercial we have now for Matt and Drew where they get to speak for themselves. But call them up and just show them how you're being invested, and they'll give you an impact report. Again, all they're looking for is the opportunity to meet more people, and some of those people are gelling. They connect. Matt and Drew are financial advisors. They'd love to work with you, but again, they're just using that as an icebreaker. Break the ice. Let them break the ice. Let them look into how you're being invested. Find any of the unwoke or find any of the woke stuff, and then you can chart a course to get out of it. And if you don't want to work with a financial advisor or financial planner, you're interested in DIY and want to get into the private membership association, that financial PMA, that's actually our website, financialpma.com. Head on over there, watch a little intro video from me, and join us. Become a member. That works very differently. Instead of that 70 basis points for this and 40 basis points for another, and all those fees that go to pay some remote investment managers to put you in stuff that's probably woke and shaping a globalist woke future. Instead of that, the financial PMA, I set it at as low as I could possibly muster. It's $1,000. That's it. And it doesn't matter where that fee comes from. So most people, when you do, and I encourage it for everybody, no matter what you do or where you go, know what you're paying in addition to what you're getting. If you're getting this woke stuff, get rid of it wherever you are. Do it yourself. Take our research. If you don't want to work with the financial PMA, any of them, me, anybody, great, that's fine. But still, don't fund the woke. Take the research and DIY. You can get online yourself and open a discount brokerage account somewhere and run with it. Remember, you're responsible for the investment returns, but then again, that's true virtually everywhere. You'll know what you own. You'll get a clear, transparent portfolio. You've seen the episodes, or if you haven't, go back and watch them. We're actually highlight. I put behind me on the green screen an actual portfolio that one of our clients is in as a real live example. You see the companies, and that is a trading portfolio where you can take the research that we're doing, uncovering and putting a spotlight on the woke stuff and finding better alternatives. We are looking for managers, mutual funds and things like them that aren't woke. Unfortunately, they're few and far between. So the easiest, clearest way for us to advocate for Americans and people who are pro-West to invest more wisely and not be funneled into the woke stuff is building a portfolio where you actually see what you own and you control it. And that's a stock portfolio. The added bonus being, of course, that you can strip out those management fees. And if you do join the way that I've set it up, that's it. There's no extra. We don't ever make any other money elsewhere. It's just simply a flat fee that pays for research, the podcasts, everything. It helps to keep our lights on and keep us going. That fee needn't come out of your investments. So that means even more money staying in your account, compounding and growing over time. I'm a big advocate for that. The last piece, and a big part of the reason that I built the financial PMA the way that I did, is I want other people to copy that. I want other people out there, and I would do a jig. I'd leap up and click my heels and do a jig. If suddenly overnight, huge numbers of people who work in finance decided to leave woke Wall Street and these globalist banks that pressure them into being asset gatherers and funneling as many people as possible into this high profit garbage and started their own PMA, more people should duplicate the things that I'm doing. Because in my book, as I said before, I view my role similar to America's Frontline Doctors, which was started by Dr. Simone Gold, and the things that are happening in, I actually like the Wellness Company, and I get a lot of stuff from them. They're doing things in the health space that I'm pushing for and advocating for in the financial space. I'm not doing it on my own. I can't. I want a lot of people. We need a lot of people to listen to this message, adopt it, and run with it everywhere. So with that said, I don't see any comments. I'm just double checking here. Thanks everybody for coming in and joining this conversation. If you do have any questions or something occurs to you later, I always forget to mention, please like this, comment and share. That's the way that we overcome the algorithms. As you can imagine, on most of these platforms, the algorithm does not much care for people like me who call out companies like BlackRock and call out the woke on Wall Street. But we can overcome that by the likes and shares. If something occurs to you or you have a question that you can't ask currently on a social media platform, feel free to email me at info@unwokeinvesting.com. Again, that's info@unwokeinvesting.com. You will be kept anonymous unless you explicitly want your name included, but I'll get your question answered directly, and then ideally, with your permission, I'll include the answer with you kept anonymous publicly, because other people out there might have the same questions you do. That said, thanks again for tuning in. This has been another episode of UnWoke.Academy. Hope you enjoyed it.